Everybody, happy. Yeah, I wasn't sure. Like, do you say Merry Christmas Eve or do you say Happy Christmas Eve? That's which is it? There you go. That's it. I guess I should capitalize Christmas. Yeah. Mm-mm-mm. There you go. There's your choices. Goodness. I got a little bit of gunk going on. I guess you might say something. Some sort of allergy situation. So if my voice starts giving out, I'll just have to wrap it up here. But in the meantime and in between time, Morning Monster coming at you here. I don't plan on ditching y'all. I plan on making money today. The market does close at 1 p.m. Eastern. So be careful out there. Be careful out there. Especially if you're day trading. Remember that 1 p.m. That's a hard stop. 1 p.m. Eastern. So good morning, monsters. Grab your beverage of choice. Because today we're talking about the most brilliant, most circular, most profitable business model that I may have ever uncovered here. It's a story about a guy named Sam. Uncle Sam, that is. Now, picture Sam. He's not doing so hot. He's got type 2 diabetes, heart disease. His blood pressure is higher than his credit card limit. He makes about $27,000 a year, but somehow he spends at least $36,000 every day, drowning in debt. His diet, absolute disaster. Cheap junk food, grocery store, junk. And now he wants you to pay for his fancy new weight loss medication. Sounds like a freeloader, right? Well, it gets worse because the reason Sam's diet is so terrible is because he's paying himself to make the junk food in the first place. Isn't this a fun family drama, everybody? This is the obesity economics, the unintended consequences of what we've done in the past. It's the blueprint for some of the most fascinating investment opportunities in the market today. So let's break down where Sam's diet plan came from. Our government, our U.S. government, in its infinite wisdom, spends about $38 billion a year on farm subsidies. That's kind of weird if you think about it. If this is a free market and everything's hunky dory, why are we subsidizing production? If this is the most productive time we've ever had in our world, why are we subsidizing farm production? Now, if you think that money is going into broccoli and kale farmers, you haven't been paying attention. A measly 0.4% of that cash goes to the good stuff, fruits and vegetables. Where's the rest go? 70% of it goes into just 3 crops: corn, soybeans, and wheat. What do we do with all that cheap corn? Well, most of it we turn into high fructose corn syrup. The stuff that makes your soda sweet, your pancreas cry like a little baby. And how about those soybeans? We process them into cheap oils that go into pretty much everything you see on the shelf. Soybean oils and everything. Just ask Kimberly. She's allergic to all soy. We've made the unhealthiest calories on the planet artificially, irresistibly cheap, and we're literally paying farmers to make ourselves sick. And boy, oh boy, do we get sick. Now, the article I was looking at for today points out that people who eat a diet heavy in subsidized food, they're over 40% more likely to be obese. And that's not some sort of rounding error. This is a direct line from the policy to the punchline. The total cost of this obesity epidemic, golly, that's a tongue twister. Obesity obesity epidemic. Say that 3 times fast. A cool $1.4 trillion in direct and indirect costs to taxpayers. So the government creates a problem. Don't worry, the government always has a solution. That solution is where the money is. Enter these miracle solutions. Ozempic, Wegovy, Zepbound, these GLP-1 medications, they've been pretty incredible. They're helping people lose weight, control their diets, get healthier, and they're making parent companies, Novo Nordisk, that's the ticker NVO, November Victor Oscar, and Eli Lilly, Lima Lima Yankee, LLY, absolute fortune. Now, NVO's ticker is kind of going like this, and Lilly's kind of going like this. So they're not one for one. They decoupled, mainly due to the Trump. The Trump administration signed an executive order, and they put 100% tariffs on any drug not manufactured in the United States. Like if you make it somewhere else and you bring it in, 100% tariff. Everybody heard we're going to bring down drug prices, but this was his plan to bring down drug prices, was to it wasn't really a plan to bring down drug prices. It was a plan to punish companies that don't make stuff here. And there's been consequences, like NVO's stock price and Lilly's stock prices, because Lilly has manufacturing facilities here. NVO does not. It's all a beautiful circular genius of the whole operation here. Step one, we spend billions of tax dollars to subsidize crops that make us fat and sick, but hey, we can feed the masses cheap. Second, we spend billions more of our tax dollars through Medicare and health spending to buy drugs to help us lose weight and control the diabetes and the obesity and the heart disease and the government creates the disease, then buys the cure, and it's not healthcare policy, it's a business model. Actually, and it's booming. Just yesterday, December 23rd, the FDA approved an oral pill version of Wegovy. You don't need to jab yourself anymore. Novo Nordisk shot up 9% on that news. You can bet that Eli Lilly's right behind them with a pill. The market for these drugs is projected to go from about $15 billion right now on 2025 dollars to over $150 billion by 2035. That's the next 10 years. We're going to 10 times that. The most obvious investment play here, if you believe in the government's inability to fix dumb policy or maybe even make it worse, maybe you should look at exposure to NVO and Lilly. But that's not the only way to play. Let's talk about the other winners of this circus of subsidies. Who's turning all that cheap corn and soybean junk into syrup and oil? Is the agricultural processing giants, companies like Archer Daniels Midland, ADM, Alpha, Delta, Mike, and Bunge, BG, Bravo Golf. Their entire business model is built on artificially cheap raw materials, thanks to good old taxpayers like you and me. All those subsidies, they get the feedstock, they're cheap. They're the arms dealers in this war on the waistline. They've been winning for decades, and as long as the subsidies keep flowing, they keep winning. Now, maybe you're an optimist. Maybe you think, eventually people are going to get tired of this cycle and actually start eating healthy. And that's the counterplay here. You could invest in companies that are actually trying to fight the machine, selling the food that the government says we should eat but doesn't subsidize. We're talking about like Sprouts Farmers Market, Sierra, Foxtrot, Mike, SFM, or Vital Farms. That's Victor, India, Tango, Lima, VITL. Those focus on pure pasture-raised ethical products. This is a bet on long-term consumer shifts, a rebellion against the corn syrup empire and the soybean oil fry pot. There's one more fascinating ripple effect, though. A recent study found that households using these new weight loss drugs cut their grocery spending by 5%. They're not just hungry. They're just not hungry. What does that mean for traditional food companies and grocery stores? Well, it could be a slow motion disaster, actually. While everybody's cheering for the pharma giants, the neighborhood grocery store might be facing a quiet crisis. If these weight loss drugs curb appetite and reduce spending, the thing we've counted on for years, and then populations, like we're not having as many babies as we used to. I mean, this is all something to watch. We could hit peak population and start down. So there you have it. The Great American Diet Plan. We subsidize the stuff that essentially poisons us. Then we subsidize the antidotes. I mean, it's all just a giant, almost like circular firing squad. You can invest in the poison makers, ADM, Archer Daniels. You can invest in the antidote makers, Novo Nordisk and Eli Lilly. You can bet on a revolution, invest in the health guys, Sprouts or Vital Farms, or you could just sit back, sip your monster at these most absurd, profitable, ridiculous feedback loop that I've seen in modern capitalism. I mean, stay safe out there, stay sharp, stay cautious, stay skeptical. I mean, this is like, it's kind of ridiculous. We started doing this, the subsidies in the like 60s, 70s. We really started pushing them hard, telling people that's the way to eat. And golly, the unintended consequences, we made everybody fat and sick and heart disease and all that stuff, and hooked everybody on this corn syrup and the cheap carbs. Everybody says shop on the outsides of the grocery store, but who really does? Not that many people. You might, but when you look, I mean, just go to any public place and look at how many people are kind of exceeding the weight limit of their clothes. It's pretty bad. So that's all I got on that one for today. Merry Christmas, everybody. And jumping over here, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation right here intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. I'm a dude on the internet with I got some unicorn dust sprinkled on the market. I don't have any crystal ball. You want somebody to tell you what to do, hire and consult them. But let's be honest. Nobody's going to help you make more money than you taking a vested interest in your own financial well-being. So be careful out there, everybody. The S&P 500 closing at an all-time high yesterday. Closing the day higher than we've ever closed before. Higher than the one we did a couple weeks ago. Here we go, opening up. We're off to the races. So I want to point out something if I can find it. Pull this over. So I don't usually talk about this very much, but right here, there is a large gamma pocket right here. It's just a pocket of gamma. You got 3.2 billion at that 689, 1.7 billion at 690, and another 1.8 billion for Friday hanging out right there. So that's a big chunk right there. Now, if we get on the upper side of that, we could be looking at a run all the way up here in the 700 area pretty darn quickly. There's just not much on the option chain. You have 700 out there to December 31st. So if we get above here, we could shoot up here. It's almost $1 billion there. We do have some significant almost $500 million levels in here. So it's something to keep an eye on. Is it guaranteed? No. The thing I would kind of expect is we just hang out right here. This is SPY's prices, 688, 689, 690, 691. Somewhere in this zone would be what I expect us to do through Friday. Now, QQQ, on the other hand, right here. QQQ, we're sitting above the biggest level, but the numbers are much smaller here. less people play, more people play on the SPX. There is a, I mean, there is a kind of a cap on the top of this bubble, and then there's not really much up, not much up here, even out to the end of the month. So just right there at 630 maybe. There's not really giant levels on the downside either, so I would expect this to hang out. So what we might see today is a grind higher based on the options flow there. And that's just options flow. What does it mean? You know, it's kind of like reading tea leaves. It's kind of like sprinkling some unicorn dust on there and swirling it around trying to read. But we tend to hang out with those big pockets of options, and the market tends to not go far away from it. So we could grind up in here just a little bit. Just a little bit. And we'll see how we end up today. SPY. Yeah. So it's kind of interesting, you know. S&P made an all-time high. SPY, not quite there. That was the highest close, not there. So you got to be really careful when you hear those headlines like S&P closed at the highest level ever. Yeah, the cash index did. And we're not actually at an all-time high yet. Right there. So be careful celebrating. That's not an all-time high. Also, NDX, not anywhere close. This is still a lower high. Still downside pressure. This is still a downtrend. The risk for, I think the risk is elevated for some kind of flush out between now and January 14th, probably. Let's go with the 16th, since that's a Friday. I think between now and here, I think we're going to get some sort of bigger pullback. Now, I threw a trade into Discord yesterday in the bonus channel. One of the bonus channels. I'll pull that up and show it here. Just talk about it, talk through it for a moment. Just so everybody's kind of on the same page, what I'm doing. So here's the trade right here. And let's pop it out, make it bigger. So this is February of 2026. About, you know, it's 58 days today. This was yesterday, 59 days. So I bought the 680 put. You know, this, for those that aren't sure what all this means, that's a debit. You know, I paid $3.58. So that's per contract, 2 contracts. Bought 2, buy to open, sell to open. BTO, buy to open. STO, sell to open. So this was one order. All right. February 20, that was the expiration, the strike price right there, 680. Bought, 660. Sold. That means, you know, let's just pull over the option chain here and just go through it. XSP, if you're wondering, is a mini SPX. An option index. XSP. Oh, not logged in. Cool. I was like, what is happening? It won't let me do anything. Let's see. Here we go. Cool. Nothing. No data. There we go. There we go. So what I did, I flew out here February 20th. Buy this one. Sell this one right there. Still the same price. So what's your max risk? It's what you pay right here. Whatever you pay, that's your max risk. What's the max profit? It's the difference in the strikes minus what you pay. So $20 minus $350, $360. So basically $16.40 max profit. Plus you get your money back. It's basically a 4-to-1 risk to reward. Risk 1, make 4. Probably, you know, when you've tripled your money, maybe doubled your money, time to get out. Now, what is this counting on? This is counting on, the only way this makes money is if the market drops out. I mean, you could, it could make a little money if volatility increases. And come back over here, XSP. As you can see, the mini SPX options index. This is an index. It is not an ETF. You cannot put shares. You cannot get executed early. That thing popped like this right here, and those prices are still the same. So volatility down here is abysmal. Absolutely abysmal. So I bought the 680, which is right in here. Sold the 660, which is right down here. Look, and the only way this makes money is if we get a big drop like this. That is out to February, so we got lots of time. But I'm thinking something happens in the market before this. For this expiration right here. Something. And that covers a lot of the earnings too. So we could see some earnings chaos. Financial earnings start here. Big tech earnings happen here. And our contract is over there on the 20th. So sometime between here and here, I expect a trip back down here. Now, if you don't think so, don't do it. Don't do it. Why did I do it right now? Because VIX is sitting down here at the lowest level we've had in over a year. Over a year. And this is why I'm willing to go out a few months, couple months, 2 months, and put something like that on. Because usually we don't hang out down here a long time before getting some sort of another spike. Now we could hang out here a couple days, weeks, whatever. Could dip in a little lower down to the 12. Excuse me, down in 12. Maybe that's an opportunity to add, maybe wait till we dip down in here. Then you add one. I'm usually a little early on all this, but I'm trying to help people and tell you about things. See this one right over here? We got that dip, that first one, spiked up. That would be when you book profit. Then if we came back down, you'd add it back on again. Then we'd pop, take profit again. So it's just kind of the cycle we go through here. We go from a resting rate. I mean, you see these volatility events happen at somewhat regular cycles. It's been a little bit since we got the last one, even though it seems like the market's been just kind of filled with fear. And it's been almost a month and a half. I was expecting to see something probably by 2 months worth of down, of calm. The market just doesn't like to be calm, so it's just kind of insurance. It's it's not great. I like to I usually try to go for like 10-1 on my insurance plays. This one's a little, it's not the greatest right now. If this dropped on off to $1, it'd be pretty great. But so anyway, don't do it. I'm not recommending you do it. I'm just sharing something, sharing a way that you can buy a little bit of insurance. It's like a 4-1. I like the 10-1s because you can put a little money and cover a lot of stuff, but 4-1, it's okay. If we just come back to the daily roadmap line, be right back in here. Like, well, could I do this with SPY? You can do whatever you want to. I don't care. You can do it with the cash. You can do it with full size SPX if you want to. And essentially the same strikes, plus or minus a little. Why XSP instead of SPY? I just like the tax advantage there on XSP. You see they run within a couple bucks of each other. There's a little bit of variance here, but they run basically within a couple bucks of each other. So, and right now about $2.55 difference. XXP is always 1/10 of SPX. Could you just play with the SPX by a 6,800, 6,700? Yeah, you can do you. If you want to trade in that kind of size, same expirations available. Probably want to grab the PM expiration though, not the AM expiration. If you're playing in SPX itself, there's two expirations. There's an AM and a PM. I would probably play the PM if I was going to do this. You roll in here, same strikes, same to be, substantially equivalent. 6,800. Roll down here. This is 200 points. This is a big fatty. Costs you 10 times more because it's 10 times bigger. Imagine that. So same kind of deal. That one costs you, if you were going to run 10 contracts on XSP, you could just come here and be more efficient on commissions than running 10 contracts, which would be 20 contracts really. And this would just be trading 2 contracts. So you can be more efficient when you trade here. Now the potential, it's same risk reward here. So I'm protecting the downside just a little bit. I didn't add very many, just a couple contracts to cover that. And what's an example of a 10-to-1? That's where if you, I'll show you a 5-to-1 that I did. Rocket Lab, RKLB. So I bought, when we did this breakout right here, I bought the 70, sold the 80, cost me $2, or cost me $1.90 something, basically $2 with a $10, upside potential. Really, that's $8 profit, $8 profit. Another, 4 to 5 to 1 right there. Now, let me show you a 10 to 1, I think, if I can find it. If one's available, I'll show it to you. Probably not quite. Be something like this. So this one costs $1. Oh, wrong way. Try that, reverse it. Strike that, reverse it. Costs about $1. The $15 upside here. And let me log into another platform that can graph this out for you. Like this one, it graphs it, but I don't like the way it graphs it. It's not pretty and clean and easy to understand. Oh, clicking on the wrong stuff. Oh, come on now. Where are we at? Pop trading view back up. There we go. And there we go. There we go. Log it in. Give me the web platform, please. I need the order window. There we go. All right, load it all up. This is delayed data, so this account doesn't have live feed. Here you go. This is what I was talking about. We would fly out to the same place. You could play. This is IWM. You're looking at something like buy 230, sell 215. Like if you thought we were gonna drop down, and this is kind of the risk to reward here. So max loss, $100. What'd you spend? Max, there's a 14 to 1 right there. This is the kind of insurance I like. Now, maybe that's too far away from the money. So maybe we want to play somewhat closer. See, is it possible to play a little closer? That's 20 wide. Same 15 wide. That costs $2.66. Oops, I didn't click the update the price. That one's, you know, back to a 4-to-1. And 6, 7, almost 7-to-1. Eight to 1. Risk to reward. Risk 1 to make 8. So it really depends on what you expect to happen. And why am I not playing this one? I'm just not like, I'm not so sure this is going much below 236, and that range right there, 250 to 240. That's not a big 250 to 240. So we look at that, cover that. You'd have to buy right here at the money, and 240. That's $9. That's not right. Sell that one. There we go. It's 1 to 2. So that one's not very good. You'd have to be really sure that, and that's more of a trade, 1 to 2. I think my hedge is to be closer to 10 to 1, just if I'm going to go with any amount of money on it. So that one just doesn't pay. So that's why I'm not IWM. And that's why XSP, because the risk to reward basically in line with what I would do. Yeah, I like them when I can get them like risk $1 to make 10 or to make 9. Those are relatively good ones. I was doing some of those on like KWeb before, risking a small amount to potentially make some money, but these just didn't pay out very well. I was rolling out here a couple months, picking up like a let's see, 42. Get $5 up, sell that one, 50 cents. Yeah, see, that's like close to 1 to 9. If China pops, you'd make money, but if China sits there, sits still, you lose your money. So on debit spreads, you need it to move, otherwise you lose money. So, ooh. There you go. Remember, it's an early close today, everybody. So there's not much moving coming in the pre-market. I expect a light, drifty kind of day, and so far that's what we're getting. We're pushing out. Looks like we might be able to. We're actually pushing into an all-time high here with ES. It did have the contract rollover though, so we have a little more juice built into it than we did when we were up here back in October. But this is pushing up. We are getting to that 1272 level. We are to the grimace level, so be careful. This can very quickly result in a pullback. 1, 2, 3, 4, 5 up days. 1, 2, 3, 4, 5 up days. Resulted in a little pause. We pushed up. That was basically the end of the big run last time. 4 or 5 days in a row tends to be all we usually can muster in one run before we kind of chill out and get a bigger pullback. So this is almost exactly what I'm expecting to happen right here. Another one of these. You said, well, that was Trump news, whatever. Yeah. Just be careful out there, everybody. There's another 3-day up and big down. So 1, 2, 3, 4. If we get a fifth, even if we don't get a fifth, Friday or next week, we could get a sizable pullback into the new year. Sizable could be back to this low or even lower low than that low from back there on the 17th last week. Just the setup's there, so just be careful. Doesn't have to, but our buddy NASDAQ here, though, is indicating that something's up. We are not breaking higher. We are not pushing through. This is all-time high on NASDAQ. And we're down here. So we got some divergence. And then S&P 500 is not actually pushed on up yet either. So may have some upside run. This could push all the way up to 69.80 on the cash index. And then we see some downside action. Russell already hit the top, made a lower high. That set up the downside move here. But I just don't feel like the options have the risk appropriately priced. Probably somewhere down in here if we're going to push it down. We did this little baby watermelon seed squeeze thing. Tried to break out. It may reverse and come back down to the bottom right here. Be a common pattern. Oil coming back up to retest the downtrend. If we get through that, the roadmap line would be the next upside right around 61. If we hold this, probably going down to the low 50s into the new year. Wouldn't surprise me. GC potentially topped out overnight. Watch out. This can start a cascade. What's crazy is if you had bought silver on Monday, this is funny. Bought silver on Monday, you could have outperformed 4 years of holding Ethereum. It's just funny. I saw somebody post that. It just made me laugh. Like, Bitcoin, this is a potential breakdown pattern, everybody. This is a warning sign right here. The warning signs are growing for another drop. Target down in here if we break down further. So we broke down. Here's the uptrend of lows. Broke down, came back up, back tested it. Couldn't get through. This is the warning sign right there. I may add a little IBIT put spread in here. You could just buy SBIT shares if you wanted to. That may be the smarter deal. This already triggered the long on SBIT. Triggered it right there. Pulled back a little bit. Upside is right there. Let's see. Yeah, it didn't actually trigger my algorithm, but that was it though. There's the high, here's the low. That was the close above. Retrace, opportunity. Not looking for giant upside here. If you jump on this, looking for like 22%, 20%, 20%. How could you play with? So it came over here, IBIT. And this would probably happen quickly. It's probably not going to happen. So let's see, IBIT, IBT. Where would this come down to? We'd be looking for, well, I guess I have to get a percentage move here. So this may come down to 75. You're looking at 13% downside. IBIT. 13% downside. 42, 43. So not below 43. Roll in here to January. Okay, buy a put. Sell a put. 92. $1 to make. Yeah, it's $4 spread. Cost me $1, so $3 profit. And 1 to 3. And like I said, not the greatest, you know. Like maybe you could get 1 to 4. See, it costs you $1, so your max profit can only be $4. Difference in the spread, 48 minus 43 is 5. Cost you $1. So that's $4 is your max profit there. And really $3.97 at this point. And I guess I could pull the other platform back up just in case anybody's not visualizing how this works. Just flying out to January on this one. What were the strikes I was doing? 48, 43. I was buying a 48. Selling a 43. Cost about $1. There you go. 1 to 3.7. But it would take a drop all the way down in here. And this is why a lot of times I'll close it for less gain. Like even if we get down to that 43, it may only be like $200 in the profit, not $400, because it only gets to this thin line. You know, the thick line is current prices. Like if we just drop down there, your option is not going to be max value right there until we get to the expiration date. So that's the time value eating away at your position right there. Now, a bigger move down can eat away at that time value. Like if we got all the way down to 38, the time value component would be kind of eaten up by the in the moneyness. That's why, you know, as we get to expiration day, you know, at the current price, this is what it costs, but as you get to expiration day, the value drops and drops and drops, and there's zero, and what you paid becomes zero if it doesn't move down. So there you go. A little bit on debit spreads today. So there's your potential right there. If we plummet out to 75,000, IBIT probably coming down to 42 area, 42, 43. That price action just doesn't look good. And we had this like head and shoulders thing. And we've made the, from the head to the neckline here, we made that move down right there. And we've just been sitting there on it. But if we breach that, we do a double move. I could put us down here for sure. Now, there's no high probability pattern here. The high probability already kind of played out. So this would just be a little bit of a gut feel here. Could retest the, golly, be a wild thing, but we could retest that low from April. Retest the yearly low. Low of the year. That'd shock a bunch of people right there. Now, there's a bunch of people posting on social media talking about this giant OPEX that's happening this week. They need price to stay in this zone till this giant OPEX on Deribit. It's DERIBIT. They actually let you trade options on Bitcoin. Probably not in the United States, but everywhere else in the world, there's a rather sizable chunk, like half of the open interest is expiring off on this Friday. Is that going to free up price to move? Or is the Bitcoin market much bigger than Deribit, and Deribit doesn't really matter much? That's kind of my thought process, is that the Bitcoin market's actually much bigger than Deribit, and Deribit doesn't actually matter. But you know, if they controlled all the Bitcoin, it'd be a different story, but they don't. They're just a little broker hanging out there in the winds. Exchanges. Let's see. I don't even know if Deribit's on here. It should be, but I don't. I don't even see it in the top. I don't even see Deribit all the way down to the top 100. They're obviously not pushing giant volume in the crypto world. Yeah, I may have skipped it, but I don't see it. It's definitely not in the top 10 there. It's possible. I roll over it all the time when I'm just trying to read really fast, sitting here on camera. But I don't see Deribit, and for them to have enough options to control the entire Bitcoin market, I just don't believe that's the way it is. You look at the futures market, there's just no, the U.S. futures market, there's no giant blob of gamma to control Bitcoin's price. So this is, back to if you were just looking at IBIT, and they just recently upped the number of contracts that you could play to 1 million. People were capped at 25,000 contracts. So they upped it to 1 million, but the big level is up here, and it's only $10 million. It's nothing. There's not much gamma exposure on IBIT. And you look at, $10 million is nothing. There's orders for bigger than $10 million fly all the time. So there's just no, and everybody was using MSTR as a proxy, but there's no big levels here either. 15 million. These are ridiculous. These are laughable in size. So there's just no gamma exposure in the U.S. markets for Bitcoin that would drive this price anywhere. So anyway, moving on. NKD probably going to retrace. That's global liquidity. Lower high. This is setting up for a flush out. Also, looks like we're going to get some sort of New Year's surprise. Be careful, everybody. This is showing up in the charts. I don't just put on hedges willy-nilly and then talk about them in public here. And it's not a giant hedge. It's just a baby hedge. But if something gets, this is just the initial kind of like, let's see if I'm right on something. If it develops into something bigger, then I'll go more aggressive at it. So Apple. So similar to Bitcoin, we poked down below this uptrend of lows, coming back to retest. If we turn down here, that's going to be pretty ugly. Probably going to push us all the way back down in here. Back down this 250 area. I'm not drawing very straight today. And Amazon, so far so good, but still, we're kind of testing that high right there. If we break down below that roadmap line, bigger downside. If we get above this level up here, all-time highs. Google, if we can hold on to this low we just made, 337, same level, been in play for a while. Meta would look best if we would do one more little spill here. It's initial pullback, a retrace under the roadmap line. Pull back here, test that, then shoot up through, break higher. Then we're probably on the way to 1300. 12 to 1300, I should say. That would be the target if we break out here. This pullback over here, big enough to project this thing higher for a long time. Microsoft still being weak here. We broke down below the roadmap line, back tested again, setting up for this potential. Revisit this 410, 420 area, 415, 425, something like that. NVIDIA tested once, tested twice. If we reject this high right here, we reject that zone, that 618 at 195, could get a bigger retest. Now, we're going to have to break below this level first, right around 150. That's the high from last year, right here, that little orange zone. So we'd have to break through that to get the deeper retrace. But so if we push down here, that would be the next support below the roadmap line. And then if we got deeper, like Microsoft and Meta, be down here around 120. 125. Tesla keeps trying to break out, but we can't seem to stick it. This is probably indicating we're going to see a bigger retrace here. Just haven't been able to push on out from the all-time high. Probably going to get some sort of retrace. That level. Let's pull it up here. Here's the low right there. Here's the high right there. So this retrace zone. Oh, that was cool. I deleted the wrong thing. Cool, cool, cool. Just one more time. That might be where we're heading next, right there. Might be. Be careful out there, everybody. And Netflix still grinding on this top of this zone. Now that little candle right there yesterday looks like it could be done, but starting out red today may push it right back down into the lows. Now I pull everything moving $2 or more up in the pre-market, which was not very many things today. Bunch of garbage looks like. 3x leverage and nothing. Financial conglomerate, ASTX, leverage, Abvax, whatever, biotech pharma, and more biotech pharma, ASTS was popping, now we're dropping. That has triggered the upside potential for 114. AGIO, that looks pretty bad. TSEM, probably going to come back to roadmap line, RA. And that's pretty lofty here. This probably do a retrace. We can come back and retest the breakout here at 100. And then ELVR. Yeah, that could just keep ripping, but it's being ridiculous, so be careful. Then decliners, PLL, getting a retrace today, punch in the face. That hit the target, 166. Oh, retracing back to the breakout, back down here around 140, and then going again. GDXU, set up for a pullback. PDS, precision drilling, is a downtrend. Can easily get another swing down. Shiny. Potential for that to pull back. INTW. 2x leverage on Intel. Getting a dip. Probably coming back to the roadmap line. INTC. Yeah. And somebody asked something about TAO. It's not really moving. So that's less than $1. There's nothing I'm going to tell you about that. Two stocks had a setup today. I'm not a penny stock trader, and my tools maybe work on stuff under 20 bucks, but it tends to be less reliable, especially when you get under $1. Maybe, maybe not. There's just not many players when you get under $1. So 47.50 target right here. Turn on there's the entry, 47.50 target. Stop is $1 below the low. HCI. Here's the high. Here's the low. Entry, 216.34. Bias for the day is a slow drift higher, or maybe some churn. Remember that 1 p.m. close. I'm going to go probably hunt for some Christmas cheer money on NDX. And I'll be around Discord till 1 p.m. at least. Be careful out there, everybody. We'll be back Friday, same bat time, same bat channel, 9:15. Make sure you hit subscribe. Make sure you hit notifications. Merry Christmas to everybody.